Why are you using your cell phone?
Oh, don't mind me. I am simply monitoring my latest business venture. Soon, I am going to be very rich.
Oh boy.
Unlike you, I have begun putting my money to good use and have already seen positive returns.
What do you mean? Are you like betting on sports or something? Is gambling here in South Carolina even legal?
Of course not. Gambling is a sin. Actually, at the advice of random strangers on the internet who I'm sure are completely knowledgeable on the subject, I have begun investing my money into the stock market using a free trading app.
Are you sure that's a good idea?
Indeed. In fact, a user by the name of Wall Street Kitty 69 on Reddit even gave me a tip on a certain stock that is a sure bet to go up. Smartly, I invested my entire paycheck this week into the stock and have already made $3 since this morning. In a totally unrelated question, may I borrow some rent money?
What in the hell made you decide to jump into trading on the stock market? Do you have any idea what you're actually doing?
I am going to the moon, obviously.
Going to the moon? What are you even talking about?
Oh yes. To the moon is a catchphrase from several years back where Reddit users managed to make a lot of money by purchasing stock in GameStop, which made its stock price skyrocket.
Yeah, and it's also the catchphrase that Ralph Cramden used on The Honeymooners as a metaphor for beating the shit out of his wife. Those Reddit users who made lots of money on GameStop actually knew what they were doing. Do you even know the first thing about how the stock market actually works?
Of course, it is actually super easy. Companies allow people to buy shares at a certain price. You can make money by buying a share for say $10, and then simply waiting for the price to go up, allowing you to then sell the share for a profit.
Hey, and what if the price doesn't go up? What if it actually goes down? You do realize that most people lose money in the stock market versus actually making it, especially if you don't know what you're doing.
Excuse me, I spent almost 20 minutes researching on Wikipedia before diving into the stock trading world, so I think I know what I am doing.
What was that?
Anyway, in January of 2021, the user Roaring Kitty on the subreddit known as Wall Street Bets helped trigger a short squeeze of the stocks for a company known as GameStop, a store that used to sell video games but now mostly peddles and cosplay gear for nerds. As a result, the price of the stock increased in value by nearly 30 times by the end of the month, which resulted in billions of financial losses for prominent hedge funds and large gains for the legions of Reddit users who had started buying up the stock.
Do you even know what any of those terms mean?
I presume that a hedge fund is money used to pay for lawn care, and a short squeeze would be a great name for a line of animal-shaped stress balls.
Look, I won't pretend to be some kind of expert here, but shorting a stock is when you borrow a share in the morning for, say, I don't know, $10, and immediately sell it and pocket the money. Then you wait for the price to go down throughout the day to like $8 or something. Buy the share back, give it back to your stock lender at the end of the day, and then pocket the $2. Basically selling high, and then banking on the price going down so you can buy back the share at a lower price before returning it.
Can you repeat that 5 or 6 times and much more slowly?
Dear God, this is going to be a problem. Look, so what users on Reddit decided to do was squeeze the short sellers, mostly billion-dollar Wall Street hedge funds who were banking on the price going down, by amassing an army of users to invest in GameStop, which is easier than ever now thanks to apps like Robinhood. They kept raising the price instead of lowering it. So the hedge funds suddenly found themselves having to buy back the shares at higher prices than they sold them for, which devastated hedge funds. In fact, they apparently lost almost $20 billion in January of that year alone.
I am significantly more confused now than I was 2 minutes ago.
Which is exactly why you should think twice about putting your money in the stock market. Especially not any more than you can afford to lose.
Oh.
What's wrong?
Nothing. Anyway, with phone apps making the stock market more accessible than ever before, the United States has seen a wave of what are called retail investors. Retail investors are people who are not financial professionals and tend to make smaller stock purchases in the hopes of quick gains.
The key phrase in that statement is, not financial professionals, which again is why I really hope you're being careful.
Oh please, I am indeed being very careful.
You're gonna check that alert on your phone?
The sudden influx of retail investors in the market has led to concerns of potential market manipulation. A company's share price is determined by many factors, including the overall financial health of the company and just how many people are buying in. The more people buy, the higher the prices rise. Because of waves of new traders thanks to stock market apps, prices have been much more volatile than in prior years, when trading was limited to qualified financial institutions. As a result, many politicians have called for increased regulations, including Senator Elizabeth Warren, who stated that a company's share price should reflect real value, and that hedge funds have for too long treated the market as their own personal casino, designed to steal money from the casual investor.
While I like Elizabeth Warren, and appreciate her speaking up against large corporate investment firms who have no doubt spent a century screwing over the average American, it's rich coming from a politician who may be the biggest overall beneficiaries of insider trading out there.
What is insider trading?
Insider trading is when you either buy or sell stock in a company in which you have information about their internal finances and thus possibly its future stock price that isn't public. For example, a British Petroleum employee's husband was recently arrested for insider trading when it was discovered that he was able to make almost $2 million buying and selling their stock because of information he had obtained from listening in on his wife's work calls.
Well, that doesn't sound very fair.
It isn't, which is why the Justice Department takes it very seriously, unless of course you're a politician and then it's sort of just hand-waved away for some stupid fucking reason.
How so?
People in Congress have access to briefings and secret information that the general public doesn't, so they're able to more accurately predict what the stock market is going to do and can and have used that knowledge to enrich themselves. For example, right before the coronavirus pandemic, several politicians from both sides of the aisle sold off their stocks, knowing full well that the market was about to crash in the wake of the pandemic, while lying to the American public about the virus's potential for shutting down our economy. To make matters worse, former Congresswoman Kelly Loeffler not only sold off a bunch of stock so she wouldn't lose any money, but invested in teleconference software like Zoom, who would suddenly see their stock price soar over the coming months, as more and more people were quarantined.
If politicians have access to inside information, then why are they allowed to trade on the stock market?
That's a great question, and it's one that's being raised more and more these days as more casual traders jump into the fray. There is a law that prohibits politicians from insider trading, but it's notoriously difficult to enforce and relies on an honor system, which I need not remind you isn't exactly a pillar of modern politics, which has essentially seen the most powerful institutions in our government turn into fucking toxic Facebook comment threads. The real solution would be to bar politicians from trading stocks altogether. If you want to be a public servant, the whole point is to serve the public, not steal from it, which is something that people like former House Speaker Nancy Pelosi, who is vehemently against banning politicians from trading stocks, doesn't seem to understand, nor, I suspect, actually care about.
So politicians cannot get in trouble for insider trading, right?
I mean, that seems to be the case. Rules for thee, not for me.